Good morning, everybody. I'm Ed Parcaut here with Mike Kelly, and we are Real Estate Jerky Daily. Thanks for being here.
Yeah.
Mike, thanks for being here.
I made it.
Well, we all make it after Rotary eventually.
Yeah, eventually.
Yeah.
I enjoyed tearing things down today and helped Ron. I donated a bunch of puzzles to Ron. Ron's wife, Lynn, has, you know how people have
Ron who?
Ron. Come on, I remember Dickerson.
Oh, okay.
They have book houses out in front of their house.
Okay,
so
they have the library. It's the library.
And they have puzzle exchange at their place. And, you know, my wife does a lot of puzzles. And so I donated 2 boxes in a sack full of puzzles. He's like, I really don't want these.
Yeah. And then another sack full of extra pieces.
Yeah. I don't know where these go. Maybe you can make another puzzle out of these.
All right. So Thursday numbers that we were waiting on, it was the National Association of Housing Builder House Market Index and housing starts and permits, and then also initial jobless claims.
What did it do?
So the National Association of Housing Builders, right?
Yep.
So that report came out. Which really January NAHB Housing Market Index measures builder confidence, and it rose 7 points to 44.
Whoa.
Remaining in a contraction. So anything over 50 is a positive expansion.
Okay. But we're at 44 now.
Yeah.
Okay.
All of the internals, when they looked at the numbers with the future outlook going forward, current sales rose 7% to 48. So we're getting closer to 50. Right?
Yeah.
Future expansion rose 12 points to 57. So they're expecting it's going to get better.
Right.
Buyer traffic rose 5 points to 29. That's just one of those things. There's more buyers coming out than they had before. But all these numbers are better than,
And they're just saying traffic, right? They're not saying contracts. But
no,
people are out shopping.
Where the current sales is 7 points, rose 7 points to 48.
Okay.
So they're still in the contraction mode because they don't really start building until they're over this. You know, they're like, we can't build homes yet. This is not going to sell right, and we're not going to make our money.
Well, you don't need standing inventory.
They think they do.
Yeah.
Housing starts fell 4% in December to 1.466 million unit annualized pace. So what does that mean?
I don't know.
Okay. So what we say is we create 1.9 million households a year.
Okay.
We're on a building going forward for only 1.46 million. So we're still
shy.
We're still 500,000 short.
Yeah.
That's our problem.
Yep.
But, you know, if you look at it, it's really a downward revision for November also. So starts now are almost up 8% year over year. Single family starts, which is the most important, fell 9% to 1.03 million. So the difference between 1.03 million and 1.46 million is multifamily.
Gotcha.
Okay.
Yep.
So, and they're up. So single family starts is up 16% year over year total. So that's what we really need.
Gotcha.
Right?
Yep.
But if you look at, so that's housing starts. If you look at the permits, them pulling permits for future purchases, that's up 2% to 1.5 million annualized pace. Still not at 1.9 that we need.
Gotcha.
But it's still up now 6% year over year. So things are getting better to where builders are saying, okay, we're going to start building some more.
What do you think is attributing to that?
Consumer
confidence?
Yeah, pent-up demand.
Yeah.
But we still have, the numbers that came out for retail sales in December that are like, through the roof.
Right. Yeah. Because they had room on their credit card, or they got that buy now, pay later, or don't pay me later.
Pay me later.
Yeah. We'll write this off later.
We'll put it to collections and come after you. Initial jobless claims, which is the initial filing when someone becomes unemployed, fell 16% to 1.87. So 187,000. So that's the problem. We keep seeing less unemployment claims. Instead of, this is not going the way that it's supposed to be going. Well, this is a low figure, but it's the holidays probably skewed those numbers also. So we need to wait till next week, the week after, to see where it's at. Continuing people who have been on unemployment and are continuing to be on unemployment also fell 26,000 to 1.8 million. This is coming down, but and I think because one of the reasons is you're going to only be on unemployment for so long now,
right? And
you
how
can't
long
live there forever?
How long can you be on unemployment? I've never been on unemployment, so I don't know.
I've been self-employed, so I never was. The only time that you were able to get unemployment was during the pandemic if you were self-employed,
right?
And I was like, oh, they're going to set a precedence. That means for going forward, if you're self-employed, you should be able to get unemployment.
Yeah, but you can't survive on it.
Could you ever?
No. People do.
Some people do because they take a under the table job or something else.
Well, and they live in their mom's or dad's basement or closet or wherever.
or they're unhoused. I just had to say that word.
Oh,
You
okay.
can't say homeless. You have to say they don't have a house.
Well, that would mean they don't got the home.
Yeah. So
I mean, homeless.
So today, right now, if it's because of the numbers that we saw, we're we're down a little bit, 2 basis points, but we were down like 30. We had an alert to lock the last couple of days, and so we're unfortunately the bond right now we're at 4.13, which that was at one. I told you before 3.87
right
a while back, and that's why rates improved a little bit. Now we're going the opposite way. We talked about that. So we, these are still good numbers. I mean, it's just people aren't used to these rates still, but you got to get used to them. They're going to be here for a while.
I saw agents yesterday advertising and talking about how cool it would be for you to assume a interest rate on an assumable loan. Of course, not all are assumable.
Only
FHA, VA.
You're not going to assume a VA because they're not going to give up their eligibility.
9 times out of 10. Yeah, you're right. There's some conventional home loans, I understand, that are assumable. You have to qualify for them just like you'd qualify for
maybe one in
a million.
Yes. Yeah, because true, since like 2006, Fannie Freddie, they're non-assumable.
Yeah. So I just thought it was interesting that they were using that. I think we used that for 2 months in the middle of 2023.
Well,
the problem is the cash to close. I mean, people have so much equity in their home. Not a lot of people have $300,000 or $400,000 sitting in their bank account to assume a loan.
Because a lot of people look at the numbers, look at what the second's going to cost them, and then go, okay, it's just cheaper to get a new loan.
Just get a new loan. Yeah. But I thought it was interesting that they were, they're doing stuff to try to drum up business.
Yeah. Well, they're trying to, let's promote this and we'll get people calls. Oh, I can't do it.
Yeah. But I can put you in a new home.
Yeah, that's right.
Or I can put you in a resale home with a better interest rate.
Because there's 88% of the people out there who still have a rate below 6%.
Exactly.
Yeah. And my question is, how many have it below 4? 3.5 or 3. But we're never going to see those numbers again. So I don't think we're ever going to get there.
Well, never say never.
Never. They're not going to lower the interest rates to 0% again.
I can remember when I first started real estate, and there was a very seasoned, very, very professional, very good agent in the office. And he looked at me and he said, "We will never see homes selling for $100 a square foot in my lifetime." Oh no, they're selling for like $350.
I didn't say something stupid like that. That's saying that they're not. That's like when the trade, what do you call that? Patent department in 1860 said there's no reason we need the patent department anymore because they're not going to create any more new stuff.
Right. Yeah. Okay. Whatever, Rumpelstiltskin.
Yeah. That's that.
Go back to sleep. Yeah.
So that's basically where we're at right now.
Yeah.
We're going to have some more numbers tomorrow. Don't ask me what it is because I don't have it in front of me.
What are they going to be?
Rotary day of, that's why we're rushed through this one.
I see more consumer confidence out there as far as buyers are accepting the 6% or 6.5% or 6 3/4,
whatever the rate is. They understand.
They're understanding this is just the way it's going to be. Let's move forward, buy a home
before it gets too crazy.
Exactly. So it's refreshing.
Yeah. So. All right. That's all I have for today.
Me too.
All right. Well, I want to thank everybody for watching and listening to us. If you have any questions or comments, reach out. Very easy to do that. If you want us to cover something, again,
drop us a note.
Yeah, message me, text Mike, or call us, whatever. And again, you can get my book at getedsbook.com or just give me a call and I'll send it to you.
Did you write a book?
No, I didn't.
Okay.
All right. Make it a great day. Thanks for being here.
Bye, kids.
Bye.